Flexi cap category mutual funds in India, one of the most popular investment option in India. In Flexi cap category mutual fund manager can invest across the market capitalization in large cap, mid cap, and small cap without any capping. That's the reason Flexi caps are getting more and more popular. Hello friends, this is Vijay and welcome back to my channel. Friends, in this video, I would like to discuss about one Flexi cap category mutual fund, which is Motilal Oswal Flexi Cap Fund, which was launched in 2014. Over the last 10 years, the fund has created huge wealth for many investors. Friends, in this video, I would like to discuss more about this fund. Friends, you can stay till the end because we'll be learning a lot in this video. Let's get started. Motilal Oswal Flexi Cap Fund, which was launched in 2014. It's been 10 years now. If you look at the AUM, asset under management, which is 9,600 crores. If you look at the expense ratio, which is 1.40%. If you look at the NAV, net asset value, which is 48. If you look at the asset allocation, 95% of allocation into equity market, 5% of allocation into debt market. Within equity, 45% of allocation into large cap, again 45% of allocation into mid cap, 5% of allocation into small cap. Fund has got good diversification across the market capitalization. If you look at the top 5 sectors, 16% of allocation into finance, 15% of allocation into IT and software, 12% of allocation into auto component, 11% of allocation into retail, 10% of allocation into consumer durables. If you look at the top 10 stocks, the first one is Geo Financial Services, First System System, Tube Investment India, Kalyan Jewelers, Copers Limited, Polycab, Zomato, Cholamandalam Investment and Finance Company, Indus Tower, and Prestige Estate and Project Limited. Before buying any stock, they follow the strategy of QGLP framework. Q stands for quality of business and quality of management. G stands for growth, whether company has a growth potential in the future or not. L stands for longevity, whether company is able to sustain in the long term or not. P stands for price. When you are buying the stock, if you buy the stock at higher valuation, it doesn't make any sense for you. That's the reason if you are buying a stock, you should buy the stock in a discounted price only. If you look at the fund manager, Rakesh Shetty is the fund manager. He has got 15 years of experience in the industry. If you look at the return since inception, the fund has generated 18% of return, which is very good. 10,000 rupees SIP in the scheme since inception. Now your investment value will become 12 lakh rupees. Market value will become 30 lakh rupees. This is how this fund has created huge wealth for many investors. The first one is stock weightage and sector weightage. If you look at the fund doesn't have too much of exposure in single stock or single sector. This is how they have reduced the risk. Let's say if you are having too much of exposure in IT industry, IT stocks, over the last 2 years, IT stocks are giving negative return. They're in the correction mode. If you're having too much of exposure in IT stocks, your portfolio will give negative return. That's the reason scheme doesn't have too much of exposure in single stock or single sector. This is how they have reduced the risk. Next one is diversification. If you look at the scheme, the portfolio has been diversified into across the industry, across the sector, including large cap, mid cap and small cap, so that they can create a balanced portfolio. Next one is profit booking and stop loss framework. First I will go with the profit booking. Let's say you have invested in particular stocks. Some after 2-3 years, stock has rallied a lot. Already stock has created a huge wealth. Later stock became super expensive. Stock became overvalued. In such scenario, you will book the profit. I would like to give one example. In 2017, DMart had IPO. Later stock price jumped from 600 to 5000. Stock has grown a lot. Stock has created a huge wealth. Stock became super expensive. Stock became overvalued. In such scenario, they will book the profit. In the same way, if there is a fundamental change in the stock, they will exit from the stock. I would like to give one example. Before 2018, every mutual fund house, they used to invest in Yes Bank. Later, stock got into the trouble. Now, nobody is investing into the Yes Bank. Immediately, they will exit from the stock. Next one is skin in the game. What do you mean by skin in the game? In this scheme, they are not only investing investors' money, even fund manager, their employee, they are also investing into this particular scheme. To know more about this, you can watch this video. Friends, I hope you find this video useful. If you like this video, please to subscribe, please to share to the community. If you required any help with regards to mutual fund investment, you can contact me in the below link. Thank you so much.